at the City of Seattle. Also with me today is Cheryl Collins with the Office of Housing, who will help field your questions. If you have any questions during the training, go ahead and type your question into the question text box there in the webinar, and Cheryl will either, she's listed as an organizer. She will either answer your question if it's a simple one, or if it's a question that might be pertinent to the whole group, she will let me know and I will answer it for everybody. If you ask a question that we're just need to get back to you on, then she'll let you know that also. But I promise I will get back to you later this afternoon with all answers to all your questions. Also with us is Mary Baldwin with the state, who is here for technical assistance if you're having trouble with the webinar. So let's get started. The funders that use and are currently in WebARS are the Washington State Housing Finance Commission, the City of Seattle, King County, the State Housing Trust Fund, City of Tacoma, Snohomish County, City of Spokane, and the City of Bellingham. While you may not think so at times, all of us funders really are committed to making your reporting lives as easy as possible. We work almost daily on ways to reduce administrative burden to our owners and property managers. If we ask you to do something that just doesn't make sense, it is probably because some faction of HUD or the IRS or some other governing force sort of like herding cats, and thus that's why we have the slide here, before anything new or different is adopted. I am assuming that we have at this training today, out there that I can't see, bookkeepers, compliance staff, accountants, CFOs, property managers, maybe even an executive director or an asset manager. It doesn't matter really what role you call yourselves in your organization, but it does matter what role you hold in WebARS. Are you designated in WebARS as an organization administrator, an owner, a property manager, or an on-site manager? If you don't know what your role is in WebARS, please find out so that you know clearly how to work in WebARS in the role you have been assigned to. Remember, you will not be able to edit Table 4, 4A, or 4B unless you have a role in WebARS and the table is at your level. This training today is only on Table 4, 4A, and 4B. Previous trainings on Tables 1, 2, and 3 were conducted in November of 2015, and that webinar is now posted on the Finance Commission's website. Additional Table 1, 2, and 3 training will not be done again until the fall of 2016, but you can listen to the recorded trainings anytime. And this training for Table 4 that we're doing today will also be, we're taping it now, and we will also post that on the Finance Commission's website. And I believe all the funders link to that, those recorded trainings also. And always remember, we are always available to you for technical assistance. If you have questions on Tables 1, 2, 3, or 4, talk to one of your funders for guidance. And you have a user guide. The user guide is located at this web link, the Finance Commission's website. And use it. This is where the recorded trainings are there as well. Read the instructions, please. Make sure that all your staff read the instructions. Reading the instructions was a prerequisite for attending this training. So I hope you have at least the basic knowledge of how to work in WebARS. Now, some of you may be wondering why Table 4 is the way it is, and I'm going to give you just a brief history of Table 4. About 15 years ago, some of your funders wanted consistent reporting and a reduction of administrative burden to owners and property managers. So the funders took the format of the pro forma budgets that are being submitted with funder applications and adapted it for annual reporting purposes. We used the same format so we could see if assumptions made at the point of funding would actually play out in operations. And we are learning that sometimes those assumptions are accurate and sometimes they aren't. Go figure. Both funders and owners want to build on this data knowledge so our industry can learn and really identify best practices. So as you prepare, complete, and submit your Table 4s, remember our core values. Consistency. Be consistent within your portfolio of projects. Be sure all staff report in the same manner and according to the instructions. Accuracy. Accuracy is key to successful reporting. Have a second set of eyes review all work before submitting. If something looks odd to you, it will look odd to us also. Fix it or explain it. Reliability. We must be able to rely on you to do your best. We want to help you to do your best. Call us when you have questions. We don't play gotcha. I promise you, none of the funders that I work with play gotcha. We do want to help. Now I want to bring your attention to the matrix of supplemental materials that is posted on the WebARS landing page. So let me see if I can get out of my PowerPoint just for a moment and into the landing page. And that's not the landing, but we can go back to, so here's this is the training site, but the real WebARS site looks very similar to this. It just doesn't have the WebARS training language up here. So right here where it says other report information, you click on that, and then you can scroll down to the section that says, and here's that previous training webinars I was telling you about. Under WebARS instructions, you can, there's some FAQs, there's the user guide. Here's where the matrix is located. It's called Annual Report Submission Supplemental Materials. Click on that. And hopefully, in a second, the matrix will open. There it is. So, how you what we call the matrix will tell you what other materials you need to send to your funders every year with your annual report. And the WebARS is not going to remind you about this. So every year you need to look for the current annual report supplemental materials that need to be sent. Pretty much it doesn't change from year to year, but some of it does. I'm going to run through this real quickly so you can get an idea of what you need to send with your annual report by June, or with your Table 4s by June 30th of every year. If you have state commerce funding, this is the column you look at, the first column. And if there's an X in the box, that means that they want that item. If you have King County funding, this is the column you look at. If you have City of Seattle, we want everything. And so forth. Snohomish, City of Tacoma, the Finance Commission, City of Spokane, City of Bellingham. A common mistake that folks think is that that all the funders want all of your project material, and that's really not true. If the funder is in your deal, so like if you have a project that has state commerce and Snohomish County funds, then you only send these materials for that project to those two funders. Don't send it to me because I don't have any money in the deal. The items, let's go down the rows. The financial statement or audit per contract conditions. If your contract says you got to turn in an audit, then you turn in your audit. All the funders want that if your contract requires you to, except for the Finance Commission. A copy of your current insurance certificate. What that means is when you're turning in your Table 4s by June 30th of every year, send the insurance certificate that's in place at that time. Everybody but the Finance Commission wants it. Copy of your reserve account bank statements. That means your replacement reserve and your operating reserve bank statements as of 12/31 of the reporting year. Now look, here's something that's different. The Finance Commission, the State Commerce only wants those bank account statements for their home-funded projects. Everybody else, though, wants it except for the Finance Commission. Same thing with the marketing materials. State Commerce only wants it for their home-funded projects. Copy of any fair housing complaints and the disposition of these complaints. If there's an X in the box, send it. Looks like everybody wants to know about your fair housing issues, if there are any. Description of any neighborhood complaints and the outcomes of the complaint. It looks like only the City of Seattle and the City of Tacoma need that information. All of you should have management plans. If you make changes to those management plans, send us those changes if you haven't already sent it. Capital needs assessments. These are crucial for each project. If you don't have a capital needs assessment, you should try to develop one. It's an extremely important planning tool for owners, managers, and funders. Summary of tenant service changes. If you have tenant services at a project, and many of you don't, but if you do and you've had any changes to how you're handling those tenant services, submit that with your annual report. So that's kind of the, there's a page 2. Let me get to page 2. And that just kind of breaks down what I was just talking about and when everything is due and to which funder. Okay, so let me go back to my PowerPoint here. Let's see. Get into my slideshow again. All right, so we talked about the core values, and now I want to just say that, like my slide says, the information you give us is really valued by us, by all of your funders. I want to assure you that this exercise every year that you do and turn in annual reports is highly valued by us. We do look at everything you send us, and we do want to help you achieve success at your properties. It's not just a bunch of paper that we, put in a file. We actually look at it. We refer to it frequently. If we see that you're having trouble, we try to give you help. So these annual reports are pretty important. So let's go now to the live training site. And go back in. I'm going to go back in as I think I'm going back in. Yep, there we go. So if you've been in WebARs, which I hope you all have, you're familiar with this. Now you're going to see everything this is actually a real project that we're working in, or a real organization, and we're going to be going to a real project and a real site. But we've changed the name just to kind of make it anonymous, and I've messed around with some of the financial information just to make it fun, sort of. And I'm not going to go into a lot of detail with how to move around WebARs because you would have already been trained in that when you participated in the Table 1, 2, and 3 trainings. So what we're going to go right away to is the project that I want to talk about for Table 4. And we're going to use Project 19102. So this is the project detail page. And you can see it's got your project name and your address, and just pretend like it's one of your own projects. This particular project has 26 units, 4 buildings, but only 1 site. And this is important because you are going to be reporting your financial information on Table 4, 4A and 4B by site. So if you have projects with multiple sites, you're going to be doing multiple Table 4s. You can see that we have 4 funders in the deal: State Commerce, King County, Seattle Office of Housing, and the Finance Commission. And here's our site that we're going to be going to. At the site level, you can see your property manager is user 18382, which would be a real person's name in the real world. And there's no on-site manager, which could happen in a project. When you look under the reports by year, you can see that the year 2015, which is the year that we're training in and that we're going to be talking about, all of the tables are at the property manager level, and that's important. Remember when I said you need to know what role you are in WebARS? Only the property manager at this point is going to be able to get into Table 4 and to have edit rights and have the ability to do any editing. So first you click on the 2015 year. On the report cover page, if you scroll down, it's got the same information about project and site. It's got, if it's this particular project is home, I'm not going to talk about home because that was in another training. This is what I want to bring your attention to, the project update section. This is where if there are extraordinary activities or circumstances that affected the project during the year, like negative cash flow or operational difficulties, this is where it's one place where you can put information that you want to tell us. So that's what I just said. You can put comments here related to financial performance, or you can put comments on page 2 of Table 4. Either place is fine. Just give us comments if there are issues. We're going to ask, and if there's, like if you've got negative cash flow of $100,000, we're going to be asking what's going on. So anticipate that and give us the answer first, and that makes the annual report reviews go quicker. Okay, so then I'm going to scroll back up. So I think I'm going to scroll back up. Having a hard time getting there. Thank you, Cheryl. Cheryl's helping me. So along the top here, excuse me, you click on the Table 4 tab, and that brings you directly to the Table 4 that we are going to be pretending to work in and submit. And we're just going to run down how to fill out a Table 4. So remember what Table 4 is about. And I'm going to be taking this wording directly from the user guide. Table 4 is intended to be a simple income and expense report for the calendar year, January 1 through December 31, generally using accrual accounting, except for the line items replacement and operating reserves, which are cash accounting, because reserve accounts must match bank statements as of 12/31 every year. So that means you must make all required reserve deposits prior to 12/31. So now, in past trainings and my talking with other folks, this is usually when all the accountants' heads explode, because accountants want to follow GAAP accounting, and Table 4 doesn't fit that model fully. I'm sorry, but it just doesn't. It wasn't intended to be a GAAP accounting. I'm going to use accountant speak, accrual accounting, cash accounting, but for the purposes of Table 4, let's pretend we are not accountants, but rather we're very simple-minded asset managers and property managers. And yes, I know you're not simple-minded. In fact, you are some of the smartest people I know and work with. Table 4 is more of a hybrid report. Think of it that way. Table 4 has to meet the needs of very, very old, non-tax credit, unsophisticated mom-and-pop projects, as well as our newer, very complicated deals. So I think it would almost be better if we just say, for the purposes of Table 4, we want to see the income that came in to run the property for 2015, and we want to see the money that was spent for 2015 expenses and debt. Does that make sense to you? Table 4 reports only operational and service activity as a means of assessing project performance. Do not include income or expenses from the development or the construction phase of your project. This is a common mistake in the first year of operations. If a funder wants more detail, they can get that from your project financials or your audit, depending on what your contract requires you to submit. Table 4 needs to be supported, of course, by year-end internal accounting. Now you see that I said supported. Many staff think Table 4 must match an audit, like dollar for dollar. No. Remember, Table 4 is more like a property management income and expense report. It's this hybrid report. It won't match your audit dollar for dollar, but we should be able to see clearly the income and expenses that you report on Table 4 reflected accurately in your audit. Why it won't match, though, an audit is because, like, for example, we don't show depreciation on Table 4. And, for example, if you show reserve uses on Tables 4A or 4B, you do not show these same items as expenses on Table 4. If you are not sure how to report something, ask one of your funders for direction before you submit your report. Okay, so let's get into the weeds here and start looking at the numbers that I've put in here. So I want to explain the actual rental income. Let's see. Usually at this point I go to the user guide, but I'm just going to refer to it. If you want to get into, like, really see a good example in the user guide, there's a very, very good example of how you come to an actual rental income. I'm just going to talk about it though. What you do to determine your actual rental income is you take your gross potential rent, and in the example in the user guide, it assumes a 22-unit project with varied rents. There's 7 units at $1,051. There's 10 units at $701 in rent. There's 5 units at $584 in rent. So you take the total of your gross potential rent, you subtract out your vacancy loss. So in 2015, you had 4 units that were vacant 2 months each for a total of a little over $8,000. And you had 1 unit that was offline for 3 months. So you subtract out your vacancy loss. Then what the actual gross potential rent less your vacancy loss will equal your actual rental income. For the purposes of this training and sample, that actual rental income that we're going to work with is $196,933. Now remember, this is just the rent that you would have been collecting from the tenants. Your subsidy rent, for any of you who have like Section 8 rent subsidy, that's going to go down further down here in the subsidy commitment. So we'll talk about that in a minute. A common question that is asked about where do you show your unit rent for on-site staff. We want you to include the total unit rent amount for on-site staff in the actual gross potential rent. If any on-site staff receives a rent-free unit, note the cost of the free rent in expenses under on-site management, because it's a cost to the property for the on-site manager to live there. Also, do not factor in rent concessions or bad debt in rental income. Note that cost of the rent concessions and bad debt in expenses under other. We want to see rent concessions and bad debt called out because that is an indicator of performance that we are watching for. For example, if you told us during our funding round that there's a huge need for workforce housing, and then we see on your table 4 that you're giving lots of rent concessions just to keep the building fully rented, we will want to know what changed in that market and or your assumptions for the project. So tell us. Oh, well, we assumed this and it didn't play out that way. This is what we're doing to adjust to, make things work. So that's where that comment field becomes very important. So let's talk about other income. In the other income source, I'm going to go into the edit. So up here, when you want to make changes to table 4, you go into and if you're the property manager and the table is at your level, you hit the edit key. And it allows you to fill in the cells. In the drop-down, you have these other income choices: agency contribution, damage, fundraising, interest income, laundry, NSF, other fees, other income, parking, and prior year's rent arrears, and screening fees. Put your amounts in the categories that it best fits. Please don't just start listing things in other fees and other income. We do not want you to use other fees or other income unless you absolutely have no other choice that you could put it. In this example, we've got screening fees for $530. We've got damage for $6,233. And then in the comments, the damage included damage and cleaning fees. That's good information for us. The NSF and late fees are pretty straightforward. Interest income is the interest on your operating account, not on your reserve account. This is only operating, a reflection of your operating income. And then other income. If there is an amount in the other income and there was no other place to put it, then you must put in the comments exactly what it is. $5,000 in this example for the cell phone antenna. $400 for the soda machine. Be very, very clear. If you don't have enough room in the comments field, then instead, and don't abbreviate so small or so short that we don't understand. Like if you put 5,000 CPA, I would think, oh well, why would you put $5,000 to why is your CPA paying you $5,000? So if it's not a common abbreviation that we would just obviously know, then don't use an abbreviation. Actually spell it out. If you need more room, there's a comments field further on page 2 of table 4 that you can make notes in there also. Okay, so moving down to commercial net income. The commercial net income, you're already going to have taken what your income is less the expenses for your commercial spaces, and then you put the net income here. So you do the math and put just the net income on the commercial if you have commercial space. Let's talk about subsidy now. So many of our projects get different types of subsidy. As you can see, there's lots to choose from. All of the funders have we review this every year, and we try to make sure that we include all the types of subsidy that are available to you. But, there are some odd ones out there, and if you have an odd one that you absolutely know does not fit in one of these categories, then you may use other, but then you must be very clear in the comments exactly what that funding source was. I also want to bring to your attention that, as you can see, there is still a choice called HUD Section 8 agency-based. Do not use that. It's going to be removed from WebARS very soon, but in the meantime, do not use that. We don't use that subsidy anymore, and we do not want you using that anymore. So you would either have HUD Section 8 mod rehab, project-based, or tenant-based. In this particular example, this building has some service income, and it's from the King County Homeless Housing Services Fund. That $12,000 goes right there. Okay. Oh, I want to talk just a little bit about service income. Please be sure that if your agency gets service income that is designated for a specific project, that the service income and the related service expenses for that project are noted on Table 4. If the service income is not specifically designated to the project, then do not put it on Table 4. Some owners in the past assumed that because the funds were awarded to the agency, that they should not show the service income or expenses on the project's Table 4. But that's not true. We do want that service income and expense activity to show on Table 4 so we can track the true costs to operate our service-enriched projects. Now, I want you to remember to save frequently, so I'm going to go back up and hit my save button so I don't lose the work I've just done. Actually, I didn't make any changes, but I want to make sure that you guys know to, I usually tell people to just save about every 20 minutes. You probably have longer than that, but often what I find works really well is that you fill out your, like a paper copy of Table 4 so that you have all the data, and so you don't lose your data in case it times out, because until you save it, it's not in the system. Okay, let's move on down to, well, before we move down, the system will automatically do your totals for you, so you don't have to worry about that. Now, expenses. You can see that WebARS gives you last year's information for comparison. Here's the 2014 that you turned in last year. If something looks odd, or there is a big difference from the previous year, put in a comment. Let's see, I'm going to use an example. Oh, here, like if we go down to water and sewer garbage, we can see that there's a huge drop from the 2014 $52,000 down to $39,000. Wow, what happened? Oh, look, low-flow toilets were installed. See, so that means your asset managers at your funders or your compliance folks don't have to ask you if that was a mistake. Because when we see anomalies like that, we sometimes think that that's a mistake and we just want to double check. So if it's something odd, just put in a comment. Remember, only note operating and services, if there are any services, expenses on Table 4. Don't put anything from your development or construction phase of the project. This is often confusing, like I said, in the first operating year. Try to keep in mind, I'm going to repeat myself, that what Table 4 is really a reflection of your operating pro forma that was given to funders during your application to get money from us. Your development budget was separate then, and it is separate now. Funders compare what you said in your pro forma, and we want to see how your assumptions are playing out in real operations. Okay, so we have a question.
Hi, it looks like we have a question. Deborah, do you still have a question, Deborah? I'm going to unmute you for a sec. No? Okay, well, if you do have a question, just go ahead and type it in the question box, or I'm going to hit your down and raise it back up, and I'm going to turn it back over to Joey.
Okay, thank you, Cheryl. So let's just go line by line, and we'll see where we go. So let's see. The training example shows that most line items went up a bit, but some stayed the same or went down. And like I said earlier, use the comments field to explain anomalies or issues, or just giving us information. Like, for example, the on-site management of a little over $50,000, and then $12,000 in the services column. Well, that $12,000 includes the case manager salary. So that's, that's good information. Let's see. Okay, off-site management. That would, so on-site management includes any on-site management salaries. That could be your resident manager, your assistant manager, your maintenance man that's on-site. It could be the units that they are given for rent-free. Put that cost in on-site management. It could be training for your on-site staff. It could be travel expense for your on-site staff. Same thing for off-site management. That could be your, property manager that has, a certain amount of their salary designated to be paid from that project. It could be training for the off-site management. The audit and accounting is pretty straightforward. Whatever the cost for your audit and or your like your accounting staff to take care of business at the project. Now there's a big jump, and there's no comment. So in 2014 it was only close to 12,000. Now it's 84,000. Wow, what happened in 2015? We are going to ask that question, so give us a comment. Legal services, $2,500. There was nothing in 2014. Oh, it's because you had some evictions. Or maybe that was just one eviction. Excuse me. Insurance, that's a pretty straight number, whatever your property insurance is. Real estate taxes, if you have to pay them. Marketing, that's pretty straightforward. Security, if you have security on site. Maintenance and janitorial, that would be, any costs. It could be supplies for your maintenance and janitorial staff. It could be, you could actually put the salaries of your maintenance and janitorial in this line item. That, we give you some discretion with that. You could either put it up in on-site management or down here in maintenance and janitorial. All that we ask is that you're consistent from year to year. Decorating, turnover, painting, that's, your unit cost to turn a unit. Contracted maintenance would be things like your HVAC, quarterly contract. Your, let's see, what's another example of contracted maintenance that we often see? It would now, for example, let's say there was an elevator in the building, and you have a contract for the elevator company to come out and service on a regular basis. That contracted maintenance would go into the elevator line item right here. In this particular building there is no elevator, but that's where you would put it. Only put contracted maintenance items where, if there is no other place to put it. Don't lump a whole bunch in that one. Because see, what we're trying to do is we actually are tracking portfolio trends across the state. So this information is really helpful to us. So as much detail as you can give us is the best. Landscaping is pretty straightforward. Pest control, we all know that. Now this was interesting. It went up from 903 to 2,500. Oh, it's because there was some bed bug issues in 2015. Fire safety, that would be like your annual sprinklers and alarms and fire extinguishers. Water, sewer, garbage, that's your utility costs. Electric, same thing. If you have oil, gas, or other, would be like steam. Some of the buildings in Seattle have steam as their utility. Telephone could be the phone in the office. It could be your the phone that operates your intercom. Whatever telephone services that you require in the building. Now the replacement reserve, hang on, I just want to make sure I didn't miss something. So the replacement reserve should be your required amount that many of you have projects that have a requirement from one or more of your funders. So that would at a minimum be your required amount plus any additional amount that you might want to put into your replacement reserve. And you can see from the comment that I put in here, it's the required amount plus an additional $50,000 per the capital needs assessment that you have. The operating reserve is $30,000. That just happens to be the requirement for this particular building. Now here's where it's appropriate to use other. This 8,500 is several items that there wasn't enough room in the comments to put. So what we put in there was see the comments on page 2 for the detail. Then down here on page 2, there's a comment section. Here we go. Expenses other. 8,500 detail is, and again, we're being real clear and transparent. There were rent concessions of $1,471. There were credit checks of $1,689. There's the finance commission's fee, $2,171. There was bad debt of $2,689. And then there was this odd utility reimbursement to zero-income tenant for $480. Now, this came up in a prior training. That's why I wanted to throw it in here for our sample. It was a question that said this a particular project had a zero-income tenant in a HUD-subsidized unit, and you may know that you have to reimburse them for their utility allowance. So how you would show this is you would include the full subsidy amount paid to you from HUD up in the income subsidy type section, and then show the amount paid to the tenant for their utility allowance reimbursement in the other expenses. So it's a little bit odd. That's why I wanted to throw it in there, just to show you guys how to make clear comments in the comment field. Yes, there's another question.
Hi, we have another question. Hopefully the echo's gone away this time. And the question is, wouldn't credit checks go into off-site management? Joanne?
It could. So yes, you could choose as an organization to put your credit checks in off-site management because that's part of your off-site management tasks. Just be consistent. Is what we're asking. So yes, no, good question. You could put it up there. So let's see. The other excuse me, is the 30,000, and over in the comments it says partnership management fee. That's so that if you pay yourself the allowed partnership management fee, you could put it in other, or you would put it in other expenses. We do want things like partnership management fee called out clearly because it's just something we want to call out. So let's move down to debt service. And again, WebARS will do all the adding and subtracting for you. And so far in our reporting of our finances, we have a net operating income, the NOI, of $320,332. Doing pretty good. But we got a lot of debt. So now debt. Debt is very important, and we want you to list all of your debt, including the deferred debt. We want you to list all debt that is actually paid first, then list any deferred debt next. A common mistake is to not list your deferred debt, but we really do want to see all debt. So let's talk a little bit about the different debts that we're showing in this sample. Here we got a public funder, WICRA. They've got a monthly loan payment. They actually paid over $98,000 in 2015. It's listed funds paid. Then we've got another debt. Another lender that is not a public funder, so it's considered an other lender. It's Bank of America. They paid out over $91,000 in funds paid in 2015. Now here is one that is a little odd and you won't see this in all projects. Some of our projects, well, let me backtrack here a little bit. So way back earlier, when I was talking about, how the Table 4 was developed, Table 4 was not designed to follow a complicated tax credit partnerships, what's now called the waterfall agreement, but we still want to see any uses of cash flow from a property. And that includes the paid deferred developer fee. and the property management fee. I've already told you that for the purposes of Table 4, you put the property management fee up here in Expenses Other. And we want the deferred developer fee to be put in the debt services section on Table 4. Now, I know your deferred developer fee is technically not in like IOU, but just for the purposes of this report, think of it like an IOU that you will report in the debt services section when you pay it. For example, if you actually paid your deferred developer fee from your 2015 cash flow, put that amount on the 2015 Table 4. Some owners have a bit of a delay in paying their deferred developer fee. Like maybe you don't actually pay it until May of 2016 after you have determined what your waterfall agreement amounts are. But because it is being paid out of your 2015 cash flow, you will show it on your 2015 Table 4. Your Table 4s are not due until June 30th every year, so please set up your accounting practices to be sure and determine the amounts that will be paid from cash flow prior to June 30 every year, so your Table 4s can accurately reflect all the uses of that year's cash flow. I hope that makes sense. Oh, and now on a related topic, sponsor loans. Where do you show those? So, for example, if your agency has done fundraising for a project and then the agency loans the project the funds, we call that a sponsor loan. If and when that sponsor loan is paid back, you would note that also in the debt services section of Table 4. You know, I don't show any sponsor loans in my example, but that is where you would put it. Okay. So now we're getting, oh, we have another question. Hang on, let me mute myself.
Hi, we have a question about deferred debt, and does it include forgivable loans to public funders?
Oh, okay. I'm sorry, did you guys not hear any of that?
Yeah.
I'll start again. Sorry,
Yeah.
I was still muted. I thought I was unmuted. So yeah, if you're talking about a deferred, if in compliance, like for the public funder, like my example shows, the City of Seattle, you know, it's deferred if in compliance. Yes, list all your public lenders, Housing Trust Fund, deferred if in compliance. You're not actually paying on this loan, but you're listing it here. Now, if you're talking about a deferred developer fee that you haven't paid yet, then no, do not put it here in the debt services section until, like this example, it's been paid from your cash flow. Hopefully that answers your question. Okay, so now let's, we're down to the cash flow. So you've had your NOI, you're subtracting out the debt service, and you've got some positive cash flow. It's not much, but everything's good. You got $348. If by any chance, though, that you end up with negative cash flow, if it's just a minor negativity, you know, you probably don't need to, because we know that there's, you know, fluctuations of minor amounts from year to year. But and I would say anything, I don't know, what do you think, Cheryl? Anything over 1,500, 2,000, we would want to comment on, just to explain to us how are you covering the negative cash flow. If it's thousands and thousands of dollars, we absolutely want to have a comment, and that's where you'd put down here. Owner covered negative cash flow with operating reserves and or agency contribution. You know, however you covered that negative cash flow, we want to know. Don't just say, you know, you got negative cash flow. We can see that, right? But we really do want you to explain how you're taking care of the issues in your property. The next section in Table 4 are the performance measures. WebARs will actually do these calculations for you, and they calculate these measures based on what you put in on Table 1. So it calculates your vacancy rate in this building, and I'm not sure that the training site is actually populating accurately, because I know this property that we're using, and I don't think they have an occupancy rate of 80%, but let's say they did. So if you had a property with an occupancy rate of 80%, we're going to want to know what you're doing to improve that performance. A good goal, kind of an industry goal, is 95% occupancy rate or higher. If any of your buildings are lower than 95%, please explain in the comments why. You know, and sometimes you do have properties who, for valid reasons, are much lower. I have a couple of properties that serve a youth population, and that population is hard to keep in housing, and so their occupancy rates are historically low. The average unit turnaround is, 189 days. Man, oh man. The average unit turnaround that funders like to see is really 14 days or less. But we honestly don't get too worried unless the average goes over 30 days. If any of your units are vacant for 90 days or longer, you must explain why. And actually, for the Finance Commission, you must submit an extended vacancy rent ready report. So they actually have a formal process for you. But all of us want to know what's going on. Now, who out there benchmarks performance measures in their organization? Remember, it's that adage, what gets measured gets done. So we strongly recommend that you have goals for your staff to work toward, that everybody really knows what your goals are. Like everybody knows, our goal is 14 days or less turnover, or whatever your agency chooses as your goal for your staff. And then be sure to communicate that clearly and work together to achieve that. Look at your replacement reserves per unit. This has actually got pretty healthy reserves in this building, which per unit, which is good. Your debt coverage ratio. Oh, I want to say a general, and this is very, very general, rule of thumb for a starting point for replacement reserves is $350 a unit a year. That's really just a general rule of thumb. What is best, a better practice, is that you really have a capital needs assessment for each of your projects, and that CNA then helps guide your staff in the correct level of reserves needed for the long term. If you need examples of CNAs, all of us have examples posted on our websites. The state, though, in particular, has posted several different types, from the basic Excel spreadsheet to much more complicated ones. So just go to our websites, and you'll be able to, and you can get to our websites from the landing page of WebARs. A general rule of thumb for operating reserves is to have enough to cover at least 6 months of operating expenses. Debt coverage ratio, this is if you have debt. If you have debt that is paid, your debt coverage ratio should be at least 1.15 or higher. So this is a little low. They're covering their debt, but just barely. You can see they've only got $348 flexibility in their operating budget. Okay, let's move on to tables 4A and 4B, the replacement reserves and the operating reserves. Many funders require that owners maintain a replacement and operating reserve account for each project. Funds typically are required to be held in separate interest-bearing accounts. review your specific loan and regulatory agreements for your project requirements, or you can call your funders to confirm requirements such as minimum annual deposits and account restrictions. As we saw when we earlier reviewed the matrix for supplemental materials, the City of Seattle, King County, Snohomish County, City of Tacoma, City of Bellingham, City of Spokane all require that you submit copies of year-end bank statements for reserve accounts that verify Table 4A and 4B reporting. The state requires bank statements only for their home projects. So, like you can see on the matrix, you must send a copy of the 1231 bank statement, and it's got to match with what you're reporting on Table 4A and 4B. And we're talking about the balances matching. So let's talk through Table 4A first. As you can see, there's a last year's ending balance, and the WebARS just carries that forward. Now, let's say you made a mistake, forgot to report the interest, or for some reason, when you submitted your Table 4A last year. And it wasn't that big of a deal, and even though you talked it over with your funder, they decided not to unsubmit so that it would mess up your current year's reporting. So if the difference between the beginning balance that you're going to insert in here, see, so if I go into the edit key, let me show you. WebARS carries forward the last year's ending balance. You have to put in the beginning balance. It's supposed to be the same, but sometimes it isn't. If it's not the same, then make a comment down here. And in fact, WebARS is going to require you to make a comment. Forgot interest, or whatever the reason is why it doesn't balance, and just put in your comment right there. I'm going to save and get out of here. Back to the. Okay, so as you can see, the annual replacement reserve deposit from Table 4, the system just automatically carries it forward from Table 4. This is the amount of money that you put into your replacement reserve account from your operating cash flow. Then the annual bank interest earned is the amount on your reserve account. Then you list all the withdrawals and any additional deposits that didn't flow through your operating account. So it's not showing on Table 4. It's only showing on Table 4A. You made a partial roof replacement, you paid for it, $7,600 out of your replacement reserves. It goes here on Table 4A. It does not go on Table 4 because you didn't use your operating cash flow to pay for it. You used your reserves. Oh, but look, you got a grant for that low-flow toilet replacement. The money was deposited directly into your replacement reserves, and it was paid out of your replacement reserve. Here's $5,000 deposit, $5,000 withdrawal. Then you've got your ending balance of $91,271.84, and it matches with your replacement reserve bank statement at 12/31. Something that came up in one of my portfolio buildings, do not show what this accountant called deposits in transit. Now I know sometimes late in the year, on 12/29, you like, oh my gosh, I haven't made my full replacement reserve deposit, I'm putting it in now. But it's not going to show on your 12/31 statement because you didn't get it in by 12/31. And so you think that you can put your deposits in transit here in order to show that you're in compliance, but no. If it's a deposit in transit, it's a deposit in transit. It's not in the bank yet. This ending balance must match with your bank statements. Just put in a comment saying we were late in making our last deposit. It was made on January 3rd of the next year, so you're still technically in compliance. You just didn't make it by 12/31. Okay, so let's just talk through the operating reserves. It's the same process, exactly the same as your replacement reserves. Last year's ending balance is carried forward by WebARS. You insert the beginning balance. The deposit of $30,000 that was on Table 4, WebARS carries it forward to Table 4B. Whatever the interest earned on your operating reserve account, plug it in here. Oh, look, here's another adjustment. That's another way of handling an adjustment to correct a previous year's report. You can actually put it in as a withdrawal, say it's a minor adjustment. That makes your balance then matching with your 12/31/2015 bank statement balance. So, you know, that's pretty much Table 4. Do we have any questions that we can answer at this time? Okay, Cheryl has a question. Cheryl wants to make a comment. Let me mute myself.
Hello. So I just wanted to remind that don't net the amounts. So if you have bank fees, for example, show it as a separate line. Don't net it with annual bank earned interest.
Thanks, Cheryl. That's, yeah, good point. Yeah, we really want to see what kind of interest you're earning on your accounts. So any other questions? And if you think of any questions after we sign off of the webinar, you know, feel free to, you could email me at joanne.quinn, I'll spell that for you, JOANNE.QUINN@seattle.gov, or you can ask any of your funders. If you have a relationship with any of your funders, just talk to them directly. Especially if you don't have any City of Seattle funds, it's best to go directly to the funder that you do deal with on a regular basis. But I'm happy to answer any Table 4 questions of anyone. Well, we'll wait a couple of minutes to see if anybody asks questions. Well, thank you all so much. This was actually a very quick, we got through our material quickly today. I appreciate you being all so smart and, and knowing the answers to your questions already. Okay, I think we're going to end the webinar. Thank you all. And if you need to review anything in the future, we will get this posted on the Finance Commission's website, I hope within the next couple of weeks.